is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. I just had to grab the old-fashioned telephone to do this. I had a little problem with the mic, so we're looking at the Dow down 26 at 32,718 on this Monday, the 21st of November, Thanksgiving week. We're looking at the S&P. I'm going to do it with one hand. Here we go. That's unfortunate. I really like to have my two hands free. Oops, and of course I typed it into the wrong place. I'll do it one more time. SPX. There we go. S&P is down 15 at 39.49. The QQQ NDX 100 is down 2.25 at 282.56. The IW. All that's happening, as far as I'm concerned, over the last week and a half, I've been suggesting that we're in for some kind of a choppy sideways move, a kind of a breather after a spectacular move over the last many weeks. It's needed. The IWM Russell 2000 at 182.38 is down $1.34, and gold is down very sharply. Gold is down $16 at 17.37. This is very interesting because the technicals are still quite strong. Weekly chart says, yeah, you can expect some choppiness, but the daily chart pullback is a little bit more, a little deeper than I anticipated. As the silver is down sharply from a peak E-top in the Chapman wave, underneath the 200-period exponential moving average, 20.76 down 23 cents. High-grade copper, sharp, very sharp peak F-top over the 200-period moving average, now under all the moving averages, but they haven't turned negative, but it is down at 3.57, down 0.05. That's quite a pullback. Looking at natural gas, I had some questions about it. Natural gas is, let me just update that. There it is. So natural gas is up sharply. It's up 36 cents at 6.666. This is the pattern that we were looking at last week. I had questions. A couple of people asked me. You had mentioned nibbling. Actually, our subscribers have got in on the long position last week via the UNG. What are you anticipating? And what I said is it's been terrible. But this is exactly this week. In fact, these 3 days, Monday, Tuesday, Wednesday, it's really important. If natural gas is going to move up at all, this is exactly the time because it's failed up until now, talking about glut of natural gas, etc. It doesn't matter on a purely mathematical basis, the number of bars we're looking at, what we're looking at, and why we're looking at it. This is a leg C. It needed to do. You've got the up channel right here. And, in fact, if it's going to work, you really want to see at least a test of the 6.91 area within the next 2 days, and definitely the 6.30 support needs to hold at any pullback. And you just can't tell in these moves when it comes to commodities that have all these. There's an infrastructure and there's a geopolitical infrastructure, and we're going to be watching this very closely. Looking at bonds, U.S. There it is, bonds. Went to a peak D in the Chapman wave. You remember buy signal upgrading to a buy mode takes you to at least a D. We've got the D. We're holding steady here. So the yields are, in fact, pulling back a little bit. And right here, they stalled at that level. We're going to be watching it closely. And if you're looking at that, you've got to look at crude oil as well, all these overseas commodity-type relationships. We've got to monitor. So crude oil has pulled back. I spoke about it for quite some time now. I've been saying my thinking here is that crude oil actually starts to pull back, and that if it does take out the 83 level, I got to watch it because the next level of support is 79 to 78. Again, we are at 76, and that means that this arch formation, the dreaded H pattern in the weekly, has a second instance of rolling over. And that means that the low on the continuous contract of the doji candle week of the 30th of September with a low of 74.73, monitor that closely. What am I missing here? Did bond to that. Okay, I've done just about everything except I did the VIX earlier on for the update, and the VIX is trading up 11 cents, 23.23, And basically what we're looking at is, let me have a look at this a little closer. Yes, the weekly chart says if at any point this week the volatility index starts to get to 27, that's going to take about a 350-point down move in the Dow and about a 48-point move in the S&P. And so far, all it's doing is just being stuck in a trading range. But that's what it would take for that VIX index to really scream to the upside. So we'll watch it closely. All right. So with that said, a couple of things I want to look at here. Questions came in about wheat. Look, wheat is coming in for left side, right side price time match. Remember, I spent a whole chunk of time on, I haven't got two hands ready, so I can't do it at this particular point. Chapman wave unconventional flat base restart going back to the 820s. Well, that was written back when in early September, and then it screamed up to the 940, 950 area. Peak D in the Chapman wave methodology came down. Left side, right side price time match said that it should take until the 22nd of November to get to a low of 831.5 on the continuous wheat contract on the 1st of September, and today we went to 786. So that's worked out. What happened with the soybean? Soybean made a peak D. It's just stalling. It's in the middle of a range. It failed to get to the left side, right side price time match of on the 14th. It said on the 14th of November it should try to get to the high of the 13th of September, which was in the continuous contract 520, I think it was 520. Yep. So it got to 1470, and then it failed at a peak D and it's pulling back, but it's holding okay. So soybean is holding not badly, and corn is a left side, right side price time match. Oh, it's already done that, and that would have been to the low of the 1st of September of 658 in the continuous contract, but I actually made it to the 26th of August, the low of 650.25, and so far the low has only been 651.25. So it missed it by about a point. It's bounced up a little bit, but I suspect, and it's got until the 24th of November to get there. And let's look at the soybeans, which were sugar. That was doing very well. It's made a peak C in the daily chart of the continuous contract. It went over the left side, right side price time match. We're spending a lot of time talking about bar symmetry. Look, I made it the high of 20.45 in the continuous contract. Whoops, it gets smoothed out. So that was 20 on the 13th of April of this year. Plummets down to this beautiful doji candle low on the 1st of August at 16.71, and I gave you a left side, right side price time match or bar symmetry going to that was the 15th of November, and lo and behold, that high on the 15th was 20.33. Not bad, huh? 20. No, what am I saying? Yes, 20. No, it went higher than that. 20. Oh, 20 was the round number low. Was the round number high back in April. Right. So this I forgot about being smoothed out. So it went higher to a peak C, it's pulled back, and I suspect it's going to go to a D, but it did it to the day. To the day in this left side. This is going from April to November the, where did I say it was? November the 15th. Not bad, huh? To the day. And got the Chapman wave inside wedge target resistance line form. I'll be back in a moment. Basil.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. We're back and still haven't quite resolved the problem, although I believe the microphone part of it's working, but now I have the headphone. But I'll take a guess. If my wonderful engineer can just please Skype me on to say that it's time, give me a countdown to the break. Okay, here we go. So we're looking at, I got up to the soybeans. Now I want you to do a bunch of things that I got asked about. Could I go through, what was I thinking about with Exxon? I've been talking about this for a few weeks now, saying there's a digestive phase going on and that there should be some kind of a pullback in stocks like an Exxon. So here it is, Exxon trading at 108.45, down 3.6 OIH, which is the oil service, Van Eck Services ETF, trading down sharply from what I said would probably be a PG, and it is a PG. It's down 17 at 290. I'd said that stocks like RIG, etc., had a fantastic move to the upside. Now at the peak F, they should start to pull back. I said that we're looking at sometimes a relationship between where oil moves up, natural gas moves down, then oil pulls back, and natural gas moves up. In the wintertime, I don't know quite what the relationship is, but that very often happens. Let me just check the NG. Natural gas up quite nicely, up 36 cents at 6.66. What we're looking at also is the questions about Amazon. So, Rochelle, you had asked me a long time ago about Amazon. There was a period where I said there was just a nibble, and then I said, all right, now you can get into a little bit more. I think we started about 135, and then it was around about 117. And then I said, but you've got to have a tight stop at this point. This is not a big position, a longer term, because I think Amazon, from everything I'm seeing and everything that would to go with the RTH index, that's the retail index, as well as many other areas, suggest that Amazon, even though it's doing this left side, right side, just a perfect left side, right side price time match in the monthly chart. Just look at this. From the low of 81.31 that we were looking at as the low end, that was 2000. Was that March of 2020? Yes, at 81.31, March of 2020. I may as well just type it in here and then I keep looking at it. 3.2020. So there it is. I anticipated that it should be coming back towards the level, and this is the month, November. We've got another week to go. I don't know if it's going to be this week or next week, but wasn't that just a perfect left side, right side, price time match? I call it bar symmetry from the 188.65 high of July, double top, going into mid 2021. Wait. So that was July, and the double top at 111. I mean, I talk about this all the time. Over the last year and a half, the lows, the double top lows, and the double top highs are just to think of a stock. It wasn't at 180 because it was split. It was at 188.65 goes to 188.11. 5-6 months later, I mean, after pulling back pretty sharp to the 150s, that's remarkable. Anyway, 81.30 is my target. The low so far is 84, was it? 85, 87 low of the 9th of November. So in that regard, that's what we're looking at. Tesla had said once the CEO, like with Salesforce.com, takes the focus from his major concern all the years, building up an incredible company, and then just loses focus completely, you've got to be careful. And that the target I've had for Tesla is the left side low. Well, it's hit the first one, which was right there. That was at 109.83. It's already at 160.20. But my guess, based on all the... I did it, that's right, before this. That was up back in November of 2016. Look, I keep all these things. This was not automated. Every single letter that you ever see, my Chapman wave charts is done by me. So when I shut down out of the class on Saturday night, just before midnight, and I woke up on Sunday, I was thinking, this is fantastic. I did a whole bunch of charts when I did my 1 hour video for subscribers on Saturday. I mean, an hour was like a webinar. An hour video, all these different things, looking at stocks that are very important that I like to get into, etc. But waiting, we're holding off. Why we're still long down and aggressively long 3 times now, and looking to add to the back. One of the things that we're focusing on was kind of what is working, what is not working, and why there should be a little digestive phase at this particular point, and why some of the areas might move to the upside, but there are select areas. Test the chart doesn't look good at all, and he's lost his focus, Musk, and you can expect Tesla to be pulling back quite a bit. So
I wanted to do a bunch of those things. I hope I got switched over. And a question about PEP. Oh, yeah. So back to Rochelle and Amazon. There will be a buy. I think we might have to wait quite a few weeks, actually. And I don't think that this holiday season is going to help it immediately, but maybe it will when the results come in January. So that was there. And Pepsi-Cola, question about Pepsi. Pepsi is doing very well. Little double top potential right here. Pepsi trading at 183.87, up 2.54. The left side high was 183.58. So today we just snuck a tad above that in this double U. Like there's the first U, there's the second U. It looks like a W or a large U formation. And we'll see what happens if the technicals are struggling to match what they were when they were running to the top. That was back in the 2nd of November, but it's still, the price is the arbiter of the trend, and this is moving higher. The 9 period is over the 14, and this has gone to a leg E in the weekly chart, leg F in the monthly chart. So Pepsi is in this defensive area that is working very well at this particular time. Dow's down 80, S&P is down 21, and I do hear the music, so we're right on cue. I'll be back in a moment, and I did want to show you all the... I need to use 2 hands. I can't. I needed to show you the double top at PD in the 1-minute E-mini chart. I'll be back in a moment. Basil, Chapman, Dow's down 74, S&P down 21. We're trying to organize something correctly.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman. This is the Target Initials Hour, and we're looking at the S&P futures down 22. Look at this double top right here. Look at this beautiful U formation. Now, I wanted to just show you, let me grab this over here to show you that in the U. Not all software programs have the arch potential, but you can do it as a straight line. It's not a big deal. But look at the difference between this high right here at that peak D in the 1-minute chart at 9:33 this morning at 3960.50. It drops under the what? 200-period moving average, where it hung around for about 10, 14 minutes. And then it ran up to peak A, B, C, D. And look at this. This particular high with the doji candle, that peak D at 9:53, had very successful 9-period moving average over the 14, MACD stochastic. And I had to watch this very closely. The only clue to me that this was going to be a double top was the doji candle and the 2 bars afterwards that pulled back a little bit and said to me, hey, you could pull back. You're probably going to do a right shoulder failure. That's the dreaded H pattern, which it did right here at peak A, right there, and that became an A minus because it failed. And here's another one. You remember the rule of thumb with the H pattern is if it fails at a peak A or a B, test the left side low. Be careful. It can go quite a bit lower, and if it goes lower, it could even do a 1-to-1 to the downside, which is done. So this is trough E. Right there, trough E. This is trough F, and it could even be an alternate count at this particular point. Once again, we've gone to a peak A, starting to fail. So my contention has been that regardless of all the buy the dips mentality, that there's a consolidation that is much needed and it's going on. Now, because I've got everything set, even though I'm still using the telephone and not my speaker, I'm going to actually get out of that. I'm going to look and see questions that have come in to the den. Yeah, big grumble about the voice. I did not know. I'm actually very lucky to be here at all today because, as I said, just before midnight on Saturday, there must have been an update. I hate those updates. It must have been something like that. But my desktop, where all my information is, I could get a lot of stuff on my two laptops. I could get everything was working except the desktop was not communicating. The IP address or something was not being recognized. I don't know what it was. I was just really lucky to be able to get my man, Dan, my computer man. I never call on weekends. I think I might work on weekends, but most people take a break. So, but I just by chance sent him a note saying, I got this problem here. I'm not sure quite what to do. I don't want to disturb you. Maybe it'll have to be Monday. And I get back within seconds saying, I'm on my way to the office. His office is in Newton. He doesn't leave us in Back Bay, Boston. He said, I'm on my way. After I'm done, I'll give you a call. So thank goodness at about 8 o'clock last night, we got everything running so that I could get my charts up and everything. I could do my opening call for my subscribers. Although basically what I said was, I'm not doing anything today. We're not doing anything. We have our long positions. We have our no short positions at all. But we're anticipating a pullback, and so far I'm quite satisfied with that. I did get my newsletter out this morning, and here I am. So within that context, I'm just looking. Yeah, so some questions. So let me just get to the email questions. Here we go. Yeah. Basil, and you're very welcome. You're very welcome. Our 1 hour video for subscribers on Saturday. Yesterday, you had spoken about. Let me just get this up here. I want to draw it in. Right here. You had spoken about certain stocks that you were looking at that are low priced, but they seem to be in areas that are working. What are those areas again? So the areas that I'm looking at, the microbiotechs, it's very interesting that the IBB, which basically has a lot of biotechs in it, has gone to a peak D in the daily, a leg C, maybe a peak C in the weekly. And if you look at the monthly, from the high that was made at about in the 170s, plummeting down to the 104 area, and now running to 130 feet. Is that telling us that that particular area, which is different, as I mentioned on to subscribers in the video, that the PPH, which is the Van Eck Pharmaceutical ETF, has gone and stuck it right there at the 200-period moving average at peak D, did a left side, right side price time match, a little off in time, in price and time, but then it made it up. And in the weekly chart, it's in a leg B. Is there a difference? Well, I don't have a micro. I wonder if there is. I haven't found it. A microbiotech ETF. I don't think there is. But it seems to me that some of these, the very, very small ones, they might be directly biotech doing immunology or whatever it is, or they might even be the ones that assess what's going on in the biotech area. In other words, more scientific. It seems to me that's an area where pricing based on inflation and other things like that does not really affect them as badly. So I have a list of some biotechs. These are single-digit ones because I think at this particular point we're trying to put money to work. I still, unless I'm finding really good stocks that are in the 200 or even 300 area dollar price, I'm trying to stick to the very low price one. I want to just see that we've got money available to do whatever we want. At the same time, try to garner as much in the way of profits as we can for something that is working. So the answer is yes. I am looking at specific areas. As I mentioned, you'll know that I mentioned, Joe, that I mentioned one today that I'm looking at. I needed to pull back and made a peak D. It's had a fabulous move, but it's in the right area. So yes, so that's the answer there. The other answer is, other question is, why did, Dan asked, why did that is Visa, have such a strong move over the last couple of weeks? And where is it now? It's at a peak E in the day, well, leg E could be a peak E today, trading at 207 down 3. So I'm putting this in uppercase E right there in the daily. And look at this. There are so many stocks that have such fascinating chart formations, the ones that I use. Look, here's an inside track, but it's within a downtrend. Look at the down channel. Perfect with let me make this red. Let me make this green. How does this work? It's just, to me, it's one of the fascinations and one of the reasons why every day, every hour, every minute of the day, I'm looking at these patterns and saying, how did they know to make these patterns? How did they know to stop dead right on the trend line? I don't know. Well, I have a theory, my theory based on the tide, that the emotional level has a certain capacity, a certain percentage gain or loss, and if the tide is moving down, it'll move up in that particular portion and then stop. And if it's coming down, it'll move up in that particular percentage and then stop. That's not exactly a scientific reason or a mathematical reason. It's just an empiric reason. So this is in leg B, Visa. It's done very nicely. Now, what happens is that earlier on, when the rates were coming down towards almost 0%, and the credit card companies could charge whatever they wanted. That was the huge spread they were making. But now the spread, they can't move up in the same percentages as the spread was before. So yes, the price of the interest rate is higher, but they're working on a higher base. So I think that it's just kind of in a trading range. So these are, I think, MasterCard in a trading range. I'll be back then. Basil Chapman, Dallas down 98, S&P down 22.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks, we're back, and we're looking at, in the Dan PRQR, hot up. He says, oh boy, is it hot. It is only up 5% at 0.06, at 1.322 is PRQR. I did type that in once before. Let's see what happens. Let me move that away. What is it called? It's called ProQR Therapeutics, NV. That's the Netherlands, I believe. Might be wrong. Yeah, see, that's isn't that interesting, Netherlands? I have a friend whose son-in-law moved to Belgium, where they speak Dutch there as well, in the biotech area. I actually moved from the Kendall Square, Boston area. So, yeah, PRQR Therapeutics, yep, it's 1.32, very nice action, but you got to have money that you're prepared to lose when you do the biotechs at this particular in the single digits, between under $4. Anything can happen. All right, very, very good move in leg C in the daily chart, brand new C. Monthly chart is A. I believe that's B. I think that's C, D, E. It's almost like a brand new I think it's a leg B in the weekly chart. Amazing. This was stock that was up once in the 9s and it dropped to the 0.50s. 0.50s. So that's 5 cents, and now it's trading at $1.32. All right, let's get out of this. Now what we're looking at is PRQR Therapeutics NV, a biopharmaceutical company engaged in the discovery and development of RNA-based therapeutics for the treatment of genetic disorders. Thank you, Pat. Yeah, very good. Now let's do a couple of things here. I'm going to take my hands off the wheel, go to the E-mini. Right. You see these H patterns that turn into a lowercase m. So in the Chapman methodology, I always look at core patterns. There are 3 basic patterns that I look at. Straight up, straight down, that's 1. Cup formation, that's 2. Could be a V shape, but it's basically going from 1 point down back to that point. Or an arch formation, arc or arch, and you go from 1 point up and then back down again. So straight line, cup, arch, or a mix of 1 and 2 or 1 and 3. This is 1 and 3. This is the lowercase h that looks like a lowercase h that fails at a peak A or B. If it takes out the left side low, be careful because it could go 1-to-1 to the downside. If it holds and then bounces, that bounce could create a lowercase h that becomes a lowercase m, 2 mounds, right? In other words, an upside down W or an M pattern. So you've got your M pattern, the second arch, and that's the one you've got to be careful of because it's like a rectangle. If it goes from the top, finally takes out the midpoint of the rectangle, it's very likely it's going to take out the low. Well, let's see what happened here as we're talking live. Yep, there it is. There's your peak A, parallel high, so it's still an A right there. And as we're talking and as I'm saying, it's bad because it took out the left side low in an H to M pattern. I mean, this is live. So I like to do things so that if I'm right, you know immediately. In fact, it has to be immediately. Most of the time, if something doesn't work, my subscribers know when I make a call, it has to work really quickly. Otherwise, we're pretty much either out or we get stopped out with a very small loss. Because if it's going to work, the timing has to be based on methodology, and the methodology either works or it doesn't work. So here we go. Left side, right side, price, time match. Look at this. So you got the arch formation from the left side low in the E-mini at 10:34 in the morning at 3948.75. Bounces yet again, makes a peak A minus, fails, comes back down, and what does it do? Takes out the left side low. So this one is green, just so you can differentiate between the two. And exactly to the penny, this one is red, and it comes down, takes it out. Now, it could go 1-to-1 to the downside. Let's do this live. 1-to-1 to the downside from there to there. Just click on to say, in fact, I'll make it nice and thick so that you know what I'm talking about. Let me look at the charts. Yes, you can see that. here we go. What did I say? Weight. Weight is going to be nice and fat. There it is. Now I'm going to do the same thing. Yeah, and let's just see if it works out. So I've been on the show, so there's no trading here that I'm doing at this particular point. So this is the 1-to-1 to the downside. So can it get to the 3944.50 area? Yes, it can, but right now it's stalled in the middle. But that's the way I would look at it. Now, usually I'm very conservative. I like to go from the last peak to the high, and it's gone more than one to one of that. Then I say, okay, now I can go to the actual price of the low, and that's there. Let's see what happens. So we'll just go on with the show, and we'll come back in a little while and see what happens. Oh, it is a time limit. The time limit is about another 5 to 7 sessions, 1-minute sessions. And let's just see what happens. All right, here comes a question. Basil, we've been talking about IBM as being very strong. What would you do right at this moment? And that was Bobby. What was it? Yeah. What would you do at this moment? 147.44 down 20 cents. Inner leg E, it's probably going to make a peak E. The MACD is strong at 93%. The MACD is strong. The stochastics at 93%. On-balance volume is a tad overbought. The 9 is way above the 14, and the price is way above the 9. It's only a single leg A. Hard to believe, going from about 116, 117 to 147 in a single leg A. It's ready for some kind of a breather. But once you've overcome the left side highs of the peak C1, C2 back in the 144 area and closed above it as it did last week, that says that entire area of the 144 to 140 is support. So what would I do? For subscribers, I'm starting to look at the potential for leaps. Leaps are like unexpiring options. I don't know what the price of a leap on IBM would be right now. I can't remember the ratio, but it should be very, very low. And that says if you're very positive about some of the stocks going into the future, it doesn't tell you whether it's next month or 2023 or whatever, but so far IBM has acted as if it is a leader in the cloud and enterprise and AI, artificial intelligence area, just from the chart. I don't know if that's true. I mean, I remember being, I think I spoke about this, at a wedding, so it must have been, let's see, they got married, friends' children got married back, it must have been about 8 years ago, maybe 8 years ago. And I remember being in the, IBM has the headquarters out where the Marines, our former host, Rolfs used to be there. So out there in IBM land, near Hudson, New York. And I remember being at the wedding, and we were at this beautiful area. And at a break, people were hanging around, and I remember talking to someone who worked for IBM, and I said, wow, the company that's been turning around and always does the wrong thing. When are you guys going to get it right? He said, we are working so hard at changing the character of the company. It was like 8 years ago. I think they've done it. I think IBM is, in fact, an old, very old, decades-long leader that started to fail. Now it's a very long period of weakness. I think they're turning around. So, yes, I do like it. Would I start a position here at 147? Looking out, I'd say from my eye, I think this is the next level of resistance up in the 150. So over 7 points with a risk of about maybe 7 to 12 points to the downside, I'd say hold off. And once again, I'd say I think at some point we will put it into the newsletter as a leap. That is like an unexpiring option. So we'll see what happens. Dow's down 117, SP's down 26.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, we're back. Dow's down 120, S&P's down 26. Go straight to Brent in Martinez, California. Brent, you want to look at CFMS Conformis, which does hip and knee replacement. I'm intrigued with this. In fact, I have a friend who's coming back to tennis after having both knees done, and just unbelievable the way that the recovery period. I played with someone who had his knee done back in January of last year, and he's been playing since the spring, and it's doing fantastically. How are you?
I'm doing great. How are you, Basil?
I'm well, thank you. What did you do with it?
I'm calling about this stock. We've probably, have had conversations about it in the past. It's something I've traded. I just treat it as a trading stock. I'm not like in it long term. I just try to catch these bottoms in the thing, and it'll make some big runs. And in this case, Friday and then today have been, real good days in it, and just want to get your thoughts.
It's only up 26% and up 54 cents at 2.57. CFMS Conformis is the name of the company. You're absolutely correct. What it does is it has a big, in the weekly chart, it has a big green bar, and then one big green bar, and then it goes red, and it stays red and goes to lower lows. I'm thinking this is the first time that there's an opportunity that it holds 1.96 support in any pullback. And if there is a chance that it can go to a leg B and hold strongly in the today's high is 268. If it can go to 278, 283 and hold strongly, then I would look at the left side high of right there. Run out of time. We're about to run out of time. Yeah, the high that was made on the 7th of November of 288 If it can close above that, each higher high on the left side, the 3rd of November is...
Building